Bleeding Edge subscribers, hopefully you guys are doing well. So on April 1st, I said the next 4 weeks will shape the 2024 markets. And at the time, seemingly every market was pushing higher and higher. Bitcoin, gold, everything was going higher. But a fresh round of corporate earnings were about to come. And so far, it's really gone according to plan. That's because on that April 1st newsletter, I said this round of earnings over the next 4 weeks will likely see stocks fall from the highs, giving us excellent buying opportunities for high quality stocks at lower prices. And that's exactly what's happened. Today, I'm going to show you where I think these markets are heading and give you specific levels to monitor so you can be prepared. Look, I know there's a lot of things going on in the world that are downright scary, but I've been investing through terrorist attacks, 9/11, multiple wars in the Middle East, the great financial crisis, and even a global pandemic. In each case, it was a buying opportunity for long-term investors. And I want you to capitalize on what I think will just be a temporary pullback in the stock market. Let's move over to the charts so I can show you exactly what I mean. So the first round of earnings came from the financial sector, the large banks, JP Morgan, Wells Fargo, Bank of America today, and it's done exactly what we thought. Markets have rolled over. This is represented by the XLF ETF. We'll be going through the sector ETFs, and if you're in a Vanguard ETF or another ETF out there, they're all going to look relatively similar. From the highs that we made, really when our newsletter was published, we're off about 6%. But I think we've got lower to go in the XLF. The longer term trend over the last 7 years or so looks like, to me, we're going to want a deeper pullback on this one, probably another 10 to 12%. On the XLF specifically, you're looking for a drop below about $36 per share. That would be your first buying opportunity. Now, we look at XLV. That is the healthcare sector fund. For several years, this was consolidating more or less sideways between about $120 up to about $130 per share. Now, more recently, the fund has broken through, but we're seeing, like a lot of other sectors, we are putting up some red candles. Since the first of the month, we're down about 6% on the XLV. If you need some more healthcare exposure to your portfolio, the first area is actually a back test to the top of the support line back here at $135. Wouldn't be overly aggressive at that area, but that'd be the first area where I would like this. We're just a couple of dollars short of that. Of even better areas, if you get a deeper pullback, 15% off the highs, or down here right around $125. I'll say anything south of 129 on the XLV healthcare ETF, that'd be a smoking good buying opportunity. Now, the IBB is a little bit more speculative or biotech healthcare. Very difficult sector to pick on your own. I suggest sticking to ETFs. Let these mega fund managers make all the decisions for you. Longer term support is right down here on this red line, and we are approaching it. From the highs that we made back in March, we're off almost 9% on this index. I think you got a little bit more to go. Currently, shares are trading right around $127. I like this one just a little bit lower, probably closer to 120 or 121. Now, the SMH has just been rocketing higher, and it's not just more recently. You look at the SMH trend over the past 12 years, we've been locked in this elevator shaft type uptrend. SMH is the semiconductor ETF. So this is your NVIDIAs, your Intels, your AMDs, your TSMs, anybody involved in the semiconductor industry. While this one doesn't have the telltale signs of a rollover, we are certainly looking like we could top out. And certainly as you've looked over the past 12 years, this index has started to top out when it gets to the top of this channel. We're not quite there yet, but it looks like to me we want to potentially move lower. Now, this one, you absolutely want some exposure in, and you probably don't want to wait too long. Anything south of 190 on this one would be a great buying opportunity. Now, we don't get retail earnings for another 30 days or so. We will hear from Amazon before then, but Target and Walmart don't report for another month or so. But you are seeing on the retail ETF, which is the XRT, you're seeing from the highs right around when our newsletter was published, we are down about 11% on the XRT retail ETF. You've got a beautiful bed of support right here at about $55 per share. That's another 28% lower. I don't know if I'd let it get all the way down there. Anything south of about $63 or another $7 or $8 off the share price certainly could be a buying opportunity. And then finally, we've got the XLY, which is consumer discretionary. This is actually your Amazons, your Teslas. It's not your main staple or your mainline type of retail, but this is discretionary items like electric vehicles and maybe some things that you buy on Amazon. Surprisingly enough, discretionary index is not far from a buying opportunity, currently trading at about 173. Pullbacks south of, we'll call it 163, actually are a buying opportunity. And now you can see this all come together on the SPY, which is one of the most liquid S&P 500 ETFs, ticker symbol SPY. You are seeing we've been on just an absolute breakneck rally since October of 2023. I'm looking this on a weekly chart, and you see since October of 2023, there's only been 1, 2, 3 weeks where you've actually had a negative week on the SPY. Now, more recently, though, again, since we published our newsletter saying that markets are looking a little toppy, and it's not that I have a crystal ball, it's that's what this stock chart is indicating to us. Things are starting to look a little overstretched. Things are starting to look a little toppy. And then on top of that, you have corporate earnings, which don't tend to match up to the expectations and have the ability to push these markets even higher. You're seeing the market start to roll over. You've got an excellent buying opportunity, probably another 5 or 6% lower on the SPY ETF. You're looking at anything south of, I would call it 470. Currently, you're about 503 on the SPY. Anything south of about 470 would be your buying opportunity, folks. I told you April 1st, the next 4 weeks will be critical to the 2024 markets. So far, it's playing out perfectly. Be prepared. These moments only come up a few times a year. Make sure you're ready. These markets and most of these indexes are in long, sometimes decade-long uptrends. That is when you step in and you buy, and your moment is likely coming in the next couple of weeks. I'll certainly keep you updated here on the newsletter. Hopefully you have a wonderful day. We'll see you again later this week.